Hey everyone, I just wanted to give you a few tips that could easily save you a few £100, if not thousands, definitely over the next few months. So if you're trying to build wealth and you've only got your money in a kind of a general current account and it's got 1% interest, say if you've got what you're saving for a house in there, £10,000, that's only going to get you £100, in a full year. Very easily, you could be getting 5% back on that. So you're turning £100 to £500, £400 better off, and it'd probably take you less than an hour to do that. Just to look around on your, either with your existing bank or just to change bank. Some banks are offering £170, £75 free, which I think is tax free because it's like a cash back almost. And then you've also got ones that if your current account is with them, you can get a preferential rate. So with Lloyds Bank, for example, some of their generic saving or generic ISA rates are 1.7%. So better than 1%, but still not very good. Whereas with the same bank, if you just look around for the different accounts they have, you can easily get that up to, I think it's 4% on an ISA and 4.25% on the a different savings account. I think with both of those you can't withdraw more than 3 times in the period. So I suppose it's relatively easy access, but it's not completely free to access. And once you take it out take any money out more than 3 times on those accounts in a year, you get much lower rates. So it's only really if you're going to leave it in there for a rainy day. But very easily you're going from £100 a year to £400 a year. That's £300. It might take you, half an hour to set that up. Then you've got some other new accounts that are actually quite good. So I've mentioned Chip, which is an online bank before. They've got a 5.1% cash ISA, which just for basically just a easy access savings account effectively, but without the, I suppose, tax implications if you're earning a lot of interest or what have you. 5.1% compared to even the 1.7%, that's quite a big jump, and it's you can put up to £20,000 a year in the cash ISA if you want, and it's going to make you hundreds in the year if you've got that kind of money. So that's one option. They also do kind of general kind of savings accounts with Chip as well. They're fairly good rates, 4.84%, and if you can refer other people, you might get a better rate, 0.25% on top for 90 days or so. So, very easily, you can be making a few hundred more just by using those accounts. And then, the same principle kind of applies if you're in, Canada, US, America, a lot of these places, Europe. So there's actually a new account on Trading 212. We get daily interest on your the cash that you hold there, and that will accumulate then, so it'll be compound. So in the UK, I know it's 5.2%. I think in America it's 5.1%. Europe it's a bit lower at 4.2%, and then Canada's 3.5%. So this similar principle applies kind of in other countries, as well. And then if you also wanted, other tax-free options, I suppose if you're holding a lot of cash that you don't particularly need access to immediately, although, if you held it in something like NS&I in the UK, it only takes maybe a few days to get the money out. So it's almost like a saving account, but just a little bit slower. But the effective interest rate on something like an NS&I account at the moment would be 4.4%, and that's with the premium bonds. And then that's not guaranteed. So I suppose that you'd have to hold it in there for a period of time to get to on average get those returns. So it's not guaranteed. So really, unless you have a lot of money, the cap on the account I think is £50,000. So maybe if you've got that kind of level of money and you don't want it to be earning interest, which you'd pay at say high rate tax, you could have it in something like that. And then obviously all the prizes that you get are tax-free. Chip also offers a kind of prize pot, very similar way, also tax-free. So if you've got a lot of money, I suppose that you don't want to be paying tax on your interest from a general account, you could look at those. They're not quite as good as a cash ISA. As we said, from the rates, 5.1% is still a better rate. On a chip cash ISA, for example, and that there's other ones like it. And then maybe finally, the tax year is ending, so any allowances you've got you can't carry over. So although a lot of people potentially won't have 20,000 to put in this tax year, even if they've not put in anything yet, whatever you put in obviously counts towards this tax year and not next year. So if you just want to save, I would say those chip accounts are quite good. Those because all the interest is tax free on that ISA account, as is the prize one. And then that'd be the same with Lloyd's or whoever the supplier as well. But I suppose an additional point would be, also I'm a big fan of the lifetime ISA, and although that you can only put in 4,000 of your £20,000 total in a lifetime ISA, you can either use it to buy a house or you can use it for retirement. I think you have to be around 55 to withdraw it. And basically the government gives you 25%, basically as a top up, per year on up to that £4,000 you put in there. So that's why I'm a big fan of those. So if you've not used any of that £4,000 allowance and you're looking to buy a house, I think you have to wait at least a year. Or if you're looking to just start saving some money in a pension scenario, that would be a really good one, because even if you only had £1,000 to put in, that's £250 you're getting back, which obviously any of these other accounts aren't going to really come close to effectively a 25% interest rate. And also you can keep doing that every year. It'll reset, April 6th then this year in the UK. So that's what I'd say, to have a look at that. And maybe finally, also you can do either, just separate stocks and shares ISAs, or you can do stocks and shares lifetime ISAs that tend to have much better returns. So, you can do cash lifetime ISAs, and then also you're getting that 25% bonus on up to 4,000 if it's a lifetime ISA. But then you can get maybe 3 to 5% on top of that as well. So, really effective interest rates, more like 28 to 30% really, obviously on a limited amount. And then you can also do that with a stocks and shares ISA, which on average, depending what pot you pick, could easily be getting more like 5 to 10% per year returns. So you're talking about 30 to 35%. Effective interest, but again, obviously with a stocks and shares ISA, it's not guaranteed. Whereas with a cash ISA, it would be guaranteed. Some of them track the base rate. So obviously, while they're relatively high at the moment, 3 to 5%, they may drop if the Bank of England kind of reaches its target inflation kind of 2% or below. So that's just something to keep in mind. But if you had any money really to use, that you wanted to save for a particular purpose, so whether it's house buying, pension, general savings, or saving for a car, what have you, a lot of these accounts are quite good, much better than saving in a generic current account, in a lot of cases. So yeah, they're ones to have a look for. If you've enjoyed, please like and subscribe. Pop me any comments with any thoughts. Happy to look at other accounts, other countries if needed. Thank you very much. Not financial advice, but hopefully you find some helpful tips that just compare against your own scenario. Okay.